Sachs, we've got a top edge resistance at 125. We've got a key strike at 120s. So we now have a couple of parameters that we want to do a bit of business. Now you can see from Goldman Sachs' perspective, does anybody know, well, first of all, if we're looking at 125, there's the 125 up there. So we know there's overhead resistance at that price. Is there any sign that Goldman Sachs know about this trade before Goldman Sachs puts this trade onto the wires? Is there any evidence? Well, it's right there in front of you, isn't it? You know, we've talked about this before. We've talked about Goldman Sachs before, but here's a good example because this was actually a Goldman Sachs recommendation. So the thing you'll be able to recognize before that recommendation hits the wires, somebody somewhere has been buying up loads of stock at 120 strike. You couldn't make it up, guys. You couldn't make it up. So obvious. Look at that at the close, guys. Look at the close. $120. So obviously what we're going to be looking at is we're going to be watching for Goldman Sachs exiting at 125 in the morning session. What happens? In the overnight session, as we come into the pre-market, the trade trades to exactly 125. You see the volume's not in it though. There's no volume coming in. But obviously the price trades exactly to the price we gave you this morning at 125. And we know that's the overhead resistance, don't we? We know that's the overhead resistance at that price. So what happens next? Well, I'm expecting to see a huge volume surge at 120. I'm sitting as a buyer of this stock, sitting around about that key strike of 120, knowing that Goldman's bought 120s. And what happened to the price? The price traded to 120 right there. And I'm thinking to myself, she's sure fine pretty, guys. This looks like a good deal, right? Goldman Sachs bought it at 120s yesterday. I'm going to buy it at 119.95s today. Boom. Beautiful. But where the hell is the volume? Where the hell is the volume? There's no volume. Look. Where's the volume gone? So all of a sudden, I'm now guessing about this. I'm now wondering, why is there no buyers at 125? I don't get it anymore. Why is there no buyers at 120? There should have been a barrel load of buyers here. So obviously, you just pull away your bids. You pull away the bids, and hindsight's a wonderful thing because obviously the first thing that happens is the price actually goes up nicely. We go 120s to 121s, and it looks like a good trade. You would have made just under 1% on your trade at that stage. You've only been in the market for a few minutes, and you've been sitting doing quite good business. But all of a sudden, the price then sells back off, and we gap down through the 120. And since then, the price has been drifting down through that phase. But obviously, what I'm doing now is I'm watching this stock dropping, waiting to see Goldman Sachs coming in and buying some stock. I don't see it. It doesn't happen. Look. Where's the Goldman Sachs buyer below 120? Where's to be seen? And that's all that's happened, guys, is the price has just sold off and there's been absolutely no Goldman Sachs buyers coming back in at 120 or lower, which you'd have imagined would have been the perfect trade opportunity, is to buy below 120s. But then, as I said, where are they? They don't show up. Because they don't show up, I don't show up. I just let the trade go through. I just let it go through. Yeah. So let's take a look at the the Raja trade. You can see Raja comes in at NVDA, beautiful trade outcome. And when we look at NVDA, we can see that we're nowhere near the key strikes of 600 and 610s, which would be the perfect strike price, right? So again, you can see this is always a hook, guys. When I see a strong upgrade by one of the big boys, you should now recognize what happens. Put it this way, Jack. If you were a big analyst and you had a following of, say, 100,000 stock traders, and you know that tomorrow you're going to say that Raymond James, as part of Raymond James, you're going to say that NVIDIA is going to be a strong buy with a big target price. would you not be saying to your mate down the road, hey, buy some NVDA stock because it's going to rip higher tomorrow? Why is it going to rip higher tomorrow? Because I'm going to tell everybody that it's a big buy trade. Yeah, obviously. This is how some companies, and you might not like to hear it, but you're going to hear it. This is how some companies curry favour with politicians. This is how some broker houses, some dealers, direct dealers, get some favours out of politicians, because they like to just say, well, you know what, I'm going to be recommending this down at the golf club, down at the OK Corral. Somebody says something to somebody. By the way, Goldman's, we're going to be popping a little bit of value. Just thought I'd just tell you. I'm just saying we're going to be putting a bit of value into the NVDA stock tomorrow. And that information goes through to these guys at the close of the day before the release. Not on the day after. That's pointless. It's already priced in at that stage. So when you see one of these upgrades, when you see one of these key street upgrades, you just look at the previous day, you look at the close, and if they've done the deal before the close, you can guarantee that this is going to be a reasonable stock pick, assuming you're getting some value from it. So obviously what happens is that into the close, then the pre-market, we can see NVDA is already trading up from $611 to $620. And then as we come into the actual open itself, you can see there was a little rogue price spike in here as well. So you can see that, a little bit of volume. So you get a little bit of a spike in the price. And we come into the cash open. There's a cash open there. It's now at 624. So somebody's made $10. It doesn't sound like much. But that's a fair amount of volume over here, guys. That's not chicken feed. So there's a fair amount of volume in there for that closing bell right there. And sure enough, you put your buy in at the open now that you know about it. And obviously the NVDA stocks actually ripped to the upside by $30, which is 5%. 5% return on your money, guys. Now, you might be laughing at 5% return on your money, but if you've managed to do some swap deals on some stuff or some over-the-counter stuff that, you know, non-exchange stuff, and you've hidden the deal behind some other stuff and maybe doing some options or whatever, you know, that 5% is a big profit, right? Considering your exposure was zero. Effectively, your exposure is zero. You could hedge it against an index sell-off, of course. Knowing that Raymond James are going to come out tomorrow with this big strong upgrade on this stock, and then boom, the stock goes straight up behind the upgrade. But the value at the close, that's the cinch, isn't it? That's the clincher trade. The amount of volume at the close, and then the volume at the open tells you these guys are busy doing this bit of business. And sure enough, what a rip, as I said. Beautiful trade for the guys that knew about it before the public. Still a good trade for the public, but it's a better trade for these guys in here. So it's a better trade for the politicians or the guys that own the company, the insiders, the friends of the insiders, the friends of the insiders. It's a great trade for them. And it's still a reasonable trade for retail when it opens here. It gets a good upside pop because this was a strong buy. It wasn't just a buy. It was a strong buy. And obviously the bond, the stock price did well.